But maybe let's start on the estate tax front. I mean, is there, what are you seeing? What's your team seeing? And, go ahead.
Well, yeah, I mean, so to open it up here real quick, we know that ultimately we have Biden as president, and we've had trillions of dollars of COVID relief money flooding into
stimulus packages after package.
into the economy, adding a lot of debt. So what the smart people are saying is that we're most likely going to have higher taxes here in the future on the horizon. Biden's been pushing forward already, but it's becoming more and more inevitable. And so what I think we should start with at the beginning is to just talk about what some of the estate planning implications there might be on the horizon that could be in change. And one of them that's been in discussion has been that loss of step-up in basis. As of right now,
which would be huge. I mean, that's something that it's a key planning component that I know you and your team spend a lot of time building plans around. And if that's going to change, I mean, I can't imagine the wave that's going to create. Going forward.
As of right now, if somebody owns, let's say, 500 acres of farmland, and all of a sudden they bought that ground 20 years ago for $1,000 an acre or $500 an acre, but today it's worth $5,000 an acre. If that person goes and passes away, their beneficiaries or the survivors get a step up in basis from that $500 an acre to $5,000 an acre. Ultimately, what that kind of does is it kind of cleanses that capital gains tax palette that was built in before if that person tried to sell the land when they were alive.
So what you're saying is when I take possession of that land, through a succession or through a death in the family, I essentially get the value of what it is today. Instead of the basis of what.
In most situations, unless there's other planning, built in, absolutely.
Sure.
And so that allows you then to go and sell the ground if you want or do what you want with it, And so it creates, it kind of clears the taxes. But what's being proposed potentially as one of many talking points is that step up in basis goes away, that it carries on going forward, and that might make it, basically it kind of builds in those taxes inevitably then for a later date if somebody goes to try to sell the ground. So that's one thing that's been in discussion. Another one is maybe putting in a capital gains tax at death. So to get that step up on that difference between what the basis is and what it's worth today. There's been a lot of different things. Ultimately, if that does happen, it's going to incentivize people to own their assets not as much all the way until death. It's going to incentivize people to transition their assets over to their kids or to their somebody else, so that way the assets can just kind of stay being owned by someone who's alive instead of having to go through a probate or through a transfer after someone's passed away.
Right.
So that's one thing that's being discussed. We could see trusts be used a lot more going forward as a part of this. That could be something that could creep in. And ultimately, what we could be seeing is a higher death tax in the future. We don't know what it's going to be exactly. There's been some different things being floated out there. But like I just talked about, that capital gains tax could be in there. There could be still an estate tax that could be looming on the horizon. So, but it looks like death taxes in general are going to go up. So that's one piece of it. The next one is on the estate tax side. There's been a lot of talk around this, and from what we've understood so far, what's being proposed is for that federal estate tax lifetime exemption to go from, right now it's around $11.5 million, having that go back down to $3.5 million or possibly in the $5 million range.
That far, okay.
Yeah. That's what's been discussed.
That would touch a lot more clients. I mean, if you need to really roll it back that far, I mean, it's going to impact more people, for sure.
So, for a husband and wife, right now, you kind of have to have like a $23 million estate before federal estate taxes are really an issue. Well, that weeds out a lot of people. But all of a sudden, if it's rolled back to $3.5 million or $7 million for a couple, that introduces a lot more people into the crosshairs of this new proposed legislation. And so that could really change things up, especially a lot of the clients that we work with. A lot of our clients are farmers. They own farmland that's appreciated over the years. They hope that it keeps appreciating, or that's been the trend.
That's the goal. Yeah.
So all of a sudden now a lot more people are in the crosshairs. A lot of family businesses, family farms that we work with, and that could impact them.
And it sounds like, that doesn't really even take into account also, any state level taxes and any changes there as well too. That, from a federal level, you're touching more people are being impacted.
Yeah.
And once you layer in the state level,
right.
It can really can be significant.
So yeah, state level estate taxes are lower than the federal level right now. That affects many different states, and that would add on to that. So,
absolutely.
So that's on the estate planning side, Ben, but on the other side is, well, what happens to some of our clients as they're still in business, as they're operating, or if they're working like a W-2 employee. So if you're a business owner, a lot of our clients, again, are farmers. Some of the potential implications that we could see on the horizon is that a reduction back down in bonus depreciation or 179 depreciation, about that annual maximum amount that can be depreciated out. So that could be reduced down. We could see the corporate tax rate go back up. That's been in discussion.
Okay.
What we've seen so far is that going back up to that 28% compared to the 21% max now. So for the operations that are operating in a corporation, that could affect their bottom line.
You bet.
So there's been talk of getting rid of 1031 exchanges, which it would affect a lot of our clients. A lot of our clients, even on like the land exchange side.
Right.
If you go sell ground and you need to buy new ground or something of that nature, if they got rid of that option, that would be...
That's going to get the attention of a lot of people. That's definitely a tool that we have used and will continue to look at. And if that just goes away, that's...
Exactly.
Let's hope it doesn't, right?
and then I heard recently a CPA being interviewed on a podcast, and he mentioned that there's been talks of the cash method of accounting going away for farm operations. That could be a big game changer.
Wow.
And
interesting.
we don't know. Again, these are all just things that have been discussed,
floated out there, right?
Yeah, or have been made it onto a planning agenda for the future. So none of this has been implemented, but these are things that are being talked about. The other piece of some of this is that if you're a W-2 person or just tax rates in general, Biden has been saying that if you make less than $400,000, you probably won't see as much affecting you. It's the people that make over $400,000. Well, at the same time, what we're just talking about here that's on the screen is these are some things that affect the business side, not just your income.
Personal income.
Yeah.
Right.
So there's other ways that these potential tax changes could impact a lot of people. So it's going to be interesting to see what's on the horizon.
Yeah, and to understand exactly how they play out in real life scenarios and situations, to see what the end result is, with the new proposal.
People have been asking us, what do we do? What should be considering right now? And what we've been telling people is to talk with your professionals, talk with your advisors that you work with. Sit down with your CPA and your attorney, your financial planner, anybody that knows your plan, and start discussing what could we do.
Sure.
We've seen some people reach out and say, we're going to start transferring a bunch of assets right now over to the next generation because we don't know if that option is going to be there, in the future. But one thing that we didn't talk about that's part of this too is possibly decoupling the estate tax and the gift tax.
Okay.
And putting the gift tax back to $1 million of lifetime gifting before there's taxes part of it. So, a lot of our clients will gift much more than that as part of their transition plan of their business or their farm. So, it's causing people to reach out and do things right now. And for some people, that's okay. They can do that. If they have a plan in place, that they're just accelerating it.
They're just speeding up,
right.
Getting it done before the goalpost has changed.
So people are asking, what can you do? If you have a plan in place and you know that you are probably going to be transferring some assets in the future, maybe look at that plan and see, does it make sense to do it now? Am I going to cause any harm if I accelerate this?
Am I missing out on something?
To take care of this window of time that we have.
Sure.
But otherwise, we're asking people to not panic. Don't make irrational decisions that aren't thought through. And just have those discussions with your professionals and see, is there anything that we could be doing now? Otherwise, start having that thought process building into your mindset of what would we do? Once we actually have a proposed plan, what could we do?
Right.
So that way we can be ahead of it or be proactive at that time. So that's our advice right now to families and individuals.
Be aware it's something that's being talked about, nothing concrete yet, but just always trying to get ahead of what might be coming down the road here. So
absolutely. So short and sweet for today, Ben. Hopefully that
awesome.
Provided some insight.
No, it's great information. I kind of like this your seat over here. So
we should do it more often.
You got it.
Thank you.
Thanks.